Welcome back to another episode of my trading vlog, where most of the views are from returning subscribers. If that's you, give yourself a thumbs up. If not, consider subscribing. Let's talk about SPY, then we'll move on to AMC, GameStop, Playboy, and the dollar. At least those things. If I think of something else, also that. We'll just stay tuned and have a good time. SPY today made some pretty volatile moves. It always does when Fed Chairman Powell gets up there and has a press conference. There's just a lot of attention on the markets, and that speeds up or accelerates whatever we're currently doing at the time. And I believe we are in a reversal, seeing this massive spill down, and this was on volume as well. This was a big dramatic move. Of course, price bounced back, pulling higher, then slipping again. I think if we zoom out into the hourly time frame, it's going to make a little more sense. We've been in this rising diagonal, and a lot of people have this correctly identified. Definitely not the only one. What's common is that we see a push out of the AC trend line, which here would be the upper trend line, finding resistance at 437.13. This is a big retracement level, big level. I would not expect us to plow through here. We will probably hang out around this 437 level for a while if SPY is going to continue higher. Otherwise, I just expect this to see rejection quickly to the downside. One of two things: stall sideways before more up, or we just turn around and head lower. We can't really predict the future, but we've got a pretty good idea. I think we've been in the pretty strong downtrend, and this is a wave B forming a large triangle. This wave E is coming to an end. It marks the beginning of a wave C in the near future, I believe. We still haven't seen the reversal to confirm that. Today though, looking at that 437 level and where I took that level from, it's actually way back from here, from the initial impulse wave pushing lower. Very interesting. You can see that we had a rally up to about that same level in August of 2022, and this is a big level as well. People have very well identified this. Topping out above here, I have said in the past, if we can get up here, this is where we really start to consider bullish reversal on a larger time frame. It's possible that this is all part of wave 4 of a tight flag of sorts that lasted a long time, and now we're going to start seeing wave 5 push higher. That's the bullish scenario. Doesn't have to be that way though. Moving on from here, let's go to GME. We had some crazy stuff. I got price targets all over the place. Some of these are old, like these guys. We did see the price break down, reach those levels. After what? Oh, look, it's another rising diagonal with a breakout above this top trend line. Geez, and then what happened? Price tanked. This was, of course, news-driven. It's not going to be like that on SPY. Nonetheless, today we had a drop, a retracement from the high we set near 27.17. Not too surprising there. I was expecting us to top out here towards 27.16. We did at about that level. I said if we continue higher, 28.48 would be where I expect to see that reversal. We didn't continue higher. We just turned around. This is totally sensible. It makes sense to me. And now we're seeing the price test 25.51. I've been talking about 25.51. That's a big level. It's a big level. We'll see if we can get some sideways grind here and push out upward to the bullish side. Looking at the RSI on the hourly time frame, I want to say that it's kind of in the middle of the road. Momentum, of course, right now is trending downward. Looks like we might see a little pull up. It makes sense to see some sideways action here. If we lose 25.51, the next level of support is somewhere in the 24s. I wouldn't expect that to last too long, though. Really looking for a bottom at 23.29. If we drop from here, you can see that I have a few price levels. I don't have a lot of price levels. Those horizontal levels, I'm very discretionary about where I put those. There's no point in having like 10 of them and then saying, look, it hit one of my levels. Like, whatever. I've got 4 levels here, and they're pretty well spaced out between $20, $22, and $25. And seeing the price push at those levels has been pretty rewarding, I want to say. Let's go to AMC. By the way, I'm not trading either of these tickers because I cover them. I don't want to be like accused of pumping or a shill, so I don't trade these. I just give you the analysis. It's going to be the least biased analysis you can have is from someone not even trading it. We had a big ABC push higher a while ago. We kind of missed that target. When I look at the charts, so I want to say it should have been probably a little higher towards that 670 level. But remember, we have APE also trading alongside AMC. It's kind of taking away some of that energy, that forced push the price to the targets. And again, at 432, we started a descent down. Didn't quite get there. Bouncing higher sympathetically with GameStop to that $5 level, which is pretty crucial. That's where I identified a bearish reversal. We had a drop from there down to 438, pretty substantial drop. From 5 to 438, it's like 70 cents. So that's got to be about somewhere between 10 and 15%. I don't know. At any rate, I think this is a corrective rally higher. We rejected at that $5. We've set a new low. We're probably heading back down, probably going to 432, 402, 381. 3 levels here. I would definitely expect 432. 402 is really where I'm targeting, and 381 would be kind of an extreme low. If the markets in general go risk off, definitely going to see that level tagged at least a little bit. Let's go to PLBY. I know people are not interested in PLBY, but I am looking for a bottom, identifying a falling wedge through here. I'm calling it an ending diagonal triangle in Elliott wave speak. Let's turn on a line chart because these candles look awful. And then I'm going to zoom into the minute time frame here. It'll give us a little better idea of what's going on. Currently forming into a horizontal triangle after a push higher. In an ABC correction, this typically means that we're going to get a 100 to 161.8% extension here to the upside, which would bring us up to 209 at 100% and 234 at 161.8%. I'm holding 250 calls. Those calls are down like 60% right now, which I'm actually okay with. I'm gonna keep holding them. I bought them like a month ago or something, and they don't expire till the 27th of July. Today's June 14th. Another month to go there. We're looking at a test of the bottom trend line here, coming down to 172. I took an extension from the corrective wave here, and that target was hit and reached. I'm hoping to see a bounce there. That 171 level is important, so that's where I called bullish breakout. Price ran to 186. It bottomed below there, came back up, and now we're testing again, and we're doing that above this accumulation zone, I want to call it. Do I really know it's accumulation? No, volume's low, right? Anyway, let's turn on a daily chart here and turn on the default drawings. This will make more sense. There is a big falling wedge here, and then the price broke up and out and then set a new low. And as it was setting that new low, it also formed, of course, another one of these guys. This is looking a lot like a big slowdown. I want to say in the downtrend. We've broken it and we're starting to push higher. We always look for a 3-wave trend reversal. We had that push up initially to 177. That would be push 1. That second valley we call wave 2 or B, and then the next push higher, wave C or 3, needs to come above that prior high to confirm, and it did. And it will stay valid until we take out that low from that dip near 170, hanging out above that level now. Looking okay. Volume's been low. I'm okay with that. Volume sent the price higher and through that downtrend, which is what's important. The implied volatility is starting to flip. You can see that as price began to rise initially, that implied volatility started to dip. Why does that matter? Implied volatility has a big impact on the pricing of options contracts. The higher the implied volatility is, the higher the premiums become on a contract, because the risk inherent to the contract is higher because the price can move a lot further. It makes sense. I don't want to go into too much here, but we're starting to see that the implied volatility is rising as the price has formed a reversal and is now consolidating sideways. If we get a bullish breakout to the upside and we start pushing up towards $2, we are definitely going to see the implied volatility push positive. On the MACD, the short period has crossed neutral. The long period average is still swooping upwards. We're seeing the histogram turn down a little bit, and that makes sense. I'm going to turn on a candle chart here because on the daily time frame, it makes sense. This is a pretty big rejection from that 182 level. We've hit it 4 different times. We haven't gotten through it. The target was at 186 initially from the first motive wave heading higher. We had a high of 186, which is perfect. You can see that on this candle. 6.8 hit the target perfectly. And I'm going to be holding here and bullish until we break below that 170 level, as I said before. You can see that there's 3 touches here. There's like a triple bottom through here and then a bullish breakout. This, I'm not too worried about this dump. Again, it looks like it's part of a triangle to me. You can see why I turn on a line chart here on the smaller time frames because, well, this is just nonsense to look at. Let's go look at the dollar because today we had a wild push higher. Yikes. That's pretty decisive. That looks like it could be the beginning of a larger move higher. A, B, and C waves coming down and then reversing into a double bottom with a handle here. I'm expecting the dollar to break out to the upside over the longer term. We had some sort of triangle through here. Perhaps it's more appropriate to draw this even. Let's talk about flags, triangles, all that jazz. What typically tends to occur is you get a flagpole, you get an initial push higher, a motive wave, or an impulse. It sends the price, the index, whatever, much, much higher above through many horizontal technical levels. Then you get a retracement. After that retracement is typically where you get your pattern. So in this instance, we had the high over here. This would be like the top of the flagpole. Now, what we'd expect is like a triangle or a flag, and they almost never occur like perfectly like right at the top. That's really never how it goes, almost never. Typically, you get something like this, and then you get your triangle. And it gets hard because you end up just cutting out whatever that peak was from your chart drawings. It's important to remember, Elliott wave analysis tells us that the highest high in a move upward is not necessarily the top of a motive wave count. It's possible we have waves 1, 2, 3, 4, and 5. So that motive wave probably ends right here. And now we're looking for A, B, and C, which we've definitely had. And that's going to make me move this. This would be taking wave 4 and amplifying it to the top of wave 5. That's not really what I want to do. What I really want to do is take the top of wave A, apply it to wave B. You're going to watch these targets move around a little bit. Now we have a perfect touch at 102.68. And again, I should just label this. This is not the top of the motive wave. This is the top of wave 3, okay? This would be wave 4, and wave 5 ended out here. And then we had waves A, B, and C. Remember, it's important to do the Elliott wave count because you need to know where to start your chart patterns. And if you start your chart patterns in the wrong spot, you're going to get the wrong drawing, and it's not going to be very helpful. If I were still using that triangle, I'd be having to call this a downward breakout with a pull back to the pattern. But in actuality, this probably hasn't even broken down yet, and what we're really looking at on a higher wave degree is an even stronger push. Let me go ahead and clean this up a little bit. So if this is wave 3 and we have waves 4 and 5, it's possible that we are looking at, on a higher degree, waves, I think this is the top of wave A, actually. And I'll make it bigger just so it's understood that this is on a bigger wave degree, right? And I'm going to duplicate this. I got a cat here just like nuzzling my mic, which is cute, but it's also like kind of annoying. B, and then looking for C pushing higher. It's going to be a fantastic price target. Watch me take this extension tool and just rough it. So again, remember the top of wave 3, you could use this, but I'm going to use the top of wave 5. Assume we've had a low. Look at this. We've got a target at 105.983. This is at a 38.2% retracement from a larger move in the past. It's very likely that we're going to see a continuation. Okay, if you're an Elliott wave analysis, these annotations aren't going to make sense. I was just spitting these out on the fly. It looks like I called this waves 4. Really? 4-0. Interesting. I need to like look at that. 2. Oh, okay. 1, 2, 3, 4, 5. Right, and then A, B. Yep, and then we're looking for C. This is a good analysis. This is great. We're probably going to come up here and tag that downtrend. What that's going to do is put equities into a downtrend as the dollar rises. That's what I have for today. I don't want this to be too long, but I think we've hit the important bases. Oh, NVIDIA. I wanted to look at NVIDIA too. I've been forgetting to do that. Really quickly, we've had an upward breakout from the earnings flag, and that's why I wanted to talk about it. I think this was happening yesterday as we came above the close or the open from 530. This is a very bullish thing. This is crazy. Bulkowski has a webpage on high and tight flags and also earnings flags. Go check it out. It looks like 473 is the next target. This is ridiculous. Absolutely ridiculous. We're setting up a bearish divergence on the RSI. Forget the RSI right now. It's not going to be very helpful. If we're in a melt up or a bubble, the RSI is going to be useless. All the momentum indicators will be useless. Let's go have a peek at Tesla while we're at it. Tesla is starting to push higher. I was expecting this. My motive wave count was saying, my alternative count was that we were in wave A, wave B, which actually came down way over here, and now we're looking for that wave C, and I'm going to drop an extension down. I'm sorry that these charts are kind of dirty. It's okay. If you're a long-term follower, you know what's up. 267.02 would be the extension target, or 337. Hitting the C target at 267 would be perfect. We may come up here to this downtrend, but again, if the dollar starts flipping bullish, then equities should come down, and that will include NVIDIA and Tesla. Maybe not NVIDIA. That thing's going crazy. Just nuts. Now we're done. Happy trading.